Well, what's driving banks to look at or reconsider outsourcing all or part of their mortgage operation today really is the regulatory environment. I mean, you have the normal challenges inherent in that business and with the fluctuations and the volatility in the business and the cost efficiencies that you can gain by outsourcing, but the regulatory environment is making that even more challenging today. You have the impact of SAFE Act and Dodd-Frank, which is requiring banks and lenders to invest in resources and technology. So those combined factors are making it really difficult for banks to be profitable in that space and to comply, and therefore it makes it a very good, valid reason to reconsider an outsourcing. So in choosing a mortgage BPO provider, some of the critical factors or things that you really want to look for, number one is domain expertise and experience in the mortgage space. There's a lot of providers will provide work in many different verticals and areas of business. However, mortgage, as we know, is its own animal. So you really want to make sure that they can demonstrate for you that they've got experience in that area. It's important to know what sort of service level agreements to structure around that business. It's important to know how cycle times impact the customer experience. So you want to make sure that you're dealing with experienced people who know mortgage, number one. I say number two would be, from a geographical perspective, where's their delivery location? It's important, as we know, particularly with community banks and regional banks, to be onshore. There's a big focus among providers to be offshore, but I think there's a need here for a very strong onshore presence. In addition, I'd say pricing. From a pricing perspective, there should be some flexibility there. The traditional way of doing business in the outsource space was to pay per FTE. So you're lowering your cost of employees. But a provider today should be able to work with you around some transaction or outcome-based type pricing, which is the most beneficial for the bank in terms of cost savings. And it also allows for, depending on the task at hand or the services to be provided, some flexibility to structure it the best way possible. So aside from the benefits of cost savings, there are some other really great benefits that an outsource provider should be able to offer for the bank. The first of which really being process improvement. In many cases, in the mortgage space in particular, banks operate today the same way they've operated for 10 years or more. So it's an opportunity for a provider to come in and utilize their experience to analyze that life cycle and say, hey, there are things we can do differently here. There are things we can do or automate that are going to impact the cycle time or the life cycle of that loan. The benefit there, of course, is usually felt from the customer. Closing a loan more quickly or more efficiently or with more communication or touch points out to that customer generally result in a much better customer experience. I think that's a big key item for a provider to be able to offer, and part of the benefits as well. So when looking at the mortgage process, the area that is probably not as conducive to outsource is really that front-end engagement, that application process. Particularly with community banks and regional banks, that's the opportunity for the real customer interaction. The banks know their customer best. It's hard to outsource that and deliver that same type of experience.